Ladies and gentlemen, first and foremost, welcome back to the channel, and thank yourself for clicking on this video, because this is going to be the most pivotal video you have ever seen on this channel, because now we have a better understanding of what the Fed is about to do, and we have a much better understanding of what the markets are likely going to do. This is going to be, for many of you, a video that could change your life, okay? Because what we're going to discuss here in this video is what changed today. Remember, the faster that you can internalize change and decipher what that means for stocks, in this case, but really for anything, the faster you can make decisions, and in this case, the more money that you can make. Today, and the Jackson Hole meeting was the bullish equivalent to the Jackson Hole meeting in 2022. And we'll explain why that is here in this video. We will talk extensively what this means for stocks throughout the rest of this year into 2026 and how this changes things, because it's a massive change. We will discuss Tesla stock and why this is so important specifically for Tesla. If you don't know, Tesla was up over 5% today. Like, as I've talked about on this channel for a while now, it doesn't just matter what happens with Tesla, what the news flow is on any given day. We've had a lot of good news recently that has not impacted Tesla positively. We also have some dynamics that are starting to play out that could really impact Tesla more than other areas, like interest rate cuts, lower inflation, healthier economy, and a focus on AI. So this is a massively important video that could make you a lot of money. If you appreciate that kind of information, hit that like button and subscribe to the channel. Again, if you want to take it a step further, come trade with us live in real time. I share my trades, what I'm doing in my portfolio. This portfolio year to date is up about 71%, about 70%. We're outperforming 98% of hedge funds and institutions. What we're doing over there is going out finding small cap AI stocks before Wall Street does. I did this with IONQ, Nebius, Novartis Semiconductor, Applied Digital. Like, the list kind of goes on. And this was all within the last 12 months. I've spotted these opportunities. All those stocks are like 5x higher than where they were when I bought them. Some of them even more than that, okay? The stocks that I have identified right now, including one I have over $100,000 invested in, and many others do as well, is like 10, 20, 30x opportunities, okay? In my view, I could be wrong. Anything could happen. Things are subject to change. Contact a financial advisor before making an investment decision, and never assume this is financial advice. It's not. I don't know your situation. I'm not a financial advisor. Come to your own conclusions, but that link is down below in the description of this video. With that said, let's get into today's episode. Okay, so today is the equivalent of Jackson Hole in 2022, meaning that Jackson Hole in 2022 was a shift, okay? It wasn't just like a comment Powell made in 2022. It was a shift of perspective from the Fed, of the entire path forward of the Fed. Today, you got a shift from Powell, from the Fed. It wasn't just one statement. It was this shift of language, okay? Perception about what is next, okay? That's the difference. That's something you have to internalize right now. We're going to look back on this 2, 3, 4 years from now and say, wow, that was the defining moment that the Fed flipped from being overly concerned about inflation, expecting inflation, to no, tariff inflation is most likely going to be one and done. That the effects could take a little while to fully materialize, but that we're not going to get this wage price spiral. We talked about this in the last video, but think about this like taxes from the IRS, right? If taxes go up 5%, does that raise inflation? No. Okay. That's the same thing, right? In the tariff perspective. Besides, taxes, let's say, are on the citizens and tariffs are on the businesses. Okay. But if, let's say, the government raised taxes 5% per year until you hit 100%, sure, you're going to destroy the economy one day. Like, it's going to cease to exist because it's all going to be taxes. But that 5% increase one time is not going to cause inflation in and of itself. What you need to see happen to cause inflation from tariffs, from a tax, is a wage price spiral. The only way that happens is if the labor market is so hot and demand for labor is so strong that you have to give out higher wages. We haven't seen a wage price spiral in a long time. You could say we had a little bit of that in 2021 and 2022 because of the tight labor market, but really it was because people were just given money. And you don't have that aspect today. So as I've said on this channel for a long time, you are never going to see tariffs cause a lasting inflation problem. Like 2 years from now, or 6 months, 12 months from now, you're not going to see tariff-related inflation. Like, that was never in the cards. Powell today just confirmed that is also his view. This was the single biggest, most impactful quote from Jackson Hole today. This will be the quote that people look back on in 2 to 3 years and say, this was the defining quote that changed everything for markets. This is the quote right here from Fed Powell. He says, it is possible that tariff-driven upward pressure on prices could spur a lasting inflation dynamic, but it is unlikely given downside risks to the labor market. This is a defining moment where Powell finally says that you're likely not going to get lasting inflation from tariffs. A decisive shift from Powell. And this is the reason mainly why markets are moving higher today. Now, you also had news today from Canada's Prime Minister Carney that says Trump told me that Canada's move on lifting tariffs would kickstart negotiations. So they are trying to come back to the table and get a trade deal done, which less tariffs via a deal means less even of a one-time price increase or inflation from tariffs. From my view, where we sit right now, we just got through earnings season that was very strong, much stronger than expected. If I recall these numbers correctly, Wall Street was expecting 4% EPS growth quarter over quarter or year over year. We had 11% EPS growth. Earnings are accelerating at a time in which the Fed just pivoted, long overdue in my opinion, but nonetheless just pivoted from a perspective of tariffs are not going to cause a lasting inflation issue. So the Fed can start to cut rates. Now, what comes next, I think, is very important with the economic data. Over the next 5 to 6 weeks, you're going to have a Fed blackout period. You're not going to hear much from Fed officials. Again, we just got through earnings season. It's going to be a few more weeks until we start to get more of your, even large economic data coming out. But as we do start to get that economic data, the best case scenario of what you want to see is inflation moving lower and the economy holding up or getting better. That is the Goldilocks situation. As I've explained many times on this channel, all rate cuts are not good, okay? Rate cuts in and of themselves are neither bullish or bearish, okay? The reason the Fed is cutting rates is what's bullish or bearish. You could have a strong economy, and inflation falling, And even one rate cut would be seen as really good because it's just going to help, corporate America. It's going to help earnings, right? Blah, 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 what rates do, okay, when they're lowered. Or you could have a situation where we get a lot of rate cuts, but a weakening economy or recessionary economy with higher low inflation. Doesn't really matter. A lot of rate cuts would be seen as negative if it's for the wrong reason, okay? I think personally, we are going to see a situation where inflation gradually comes down in the coming months and the economy holds up. So whether we get one rate cut or three, either way, I think we're set up in a positive way heading into the end of this year. And I think, again, the perspective changed from the Fed today, from Powell, where we're not going to see this wage price spiral from tariffs. And I think Wall Street can breathe a sigh of relief a little bit from this. Now, into the end of this year, second half of October till the end of the year gets really exciting because that's when we start to focus on 2026. And 12 months from now, we should have little to no inflation, okay, from at least tariffs, right? We should have hopefully a strong economy, big, beautiful bill, stimulative measures, hopefully, should, in theory, help the economy, okay? Lower taxes, a lot of capital investment, okay? Hopefully the consumer can start to recover. Real estate should start to sell more. People can take, all the equity gain they've seen in the last couple of years, sell their home, buy a new home for reasonable price, get hundreds of thousands of dollars in their bank account. And you have this huge focus on AI that's not going away anytime soon. Now, mix on top of that what could be a series of rate cuts. What you're going to see is your high beta stocks, your higher growth stocks, your riskier assets in this market explode higher. Okay. So I think the markets generally are going to do really good, but riskier risk on AI names like a Tesla, for an example, is going to really outperform over the next couple of years, I even think. Okay. Tesla specifically is really going to outperform because what Tesla is targeting with AI is unlike any other company out there today. Okay. Tesla's actual real world value from AI, like robotaxi and humanoid robots, is unmatched. There is no other company besides NVIDIA that is the enabler of this technology in general that can even stand a candle to Tesla. Where I think the opportunity comes in with Tesla specifically is nobody's pricing that into Tesla. So as I talk about all the time, and it's kind of hard to explain this, you almost have to be in markets for a long time to understand this. I'll try my best to break it down. But stocks only move based on when expectations are upset. Okay. So you have the current narrative on Tesla, which is, AI, not really important for the Tesla story at this point. Like, nobody's paying attention to it. Optimus, nobody really cares about Optimus. It's about vehicle deliveries. It's about margins. It's about freaking EV tax credits. Like, who gives a crap about that, right? What we should be focusing on is the explosive growth that Tesla is going to see with robotaxi deployments. Okay? What we're going to witness with Optimus over the next couple of years. Nobody's pricing that in. But as rates start to come down, Wall Street will start to price that in aggressively. It could happen all at once, per se. Once you start getting a couple rate cuts, Tesla expands into, boom, couple more cities. Next thing you know, everyone's going to be talking about Tesla's AI prospects. Okay? And the fact that nobody is talking about that today leads to the opportunity that we have today in Tesla. I think firmly, if Tesla was pricing in its AI opportunity, it would be like a $3 trillion company today. Is that the max of their potential? Absolutely not. But that would be pricing in to some extent success with AI and some of their projects. Today, Tesla's not pricing in any of that, right? Now, also with rate cuts in general and a better economy, there can be upside surprises to delivery estimates, right? One thing a lot of people, I guess, do not correlate is rate cuts and a better economy disproportionately benefits autos, okay? Benefits housing and autos. Vice versa. If rates go up sharply, that hurts autos and housing disproportionately, right? So with all of this backdrop that we have right now, again, let me reiterate, lower rates coming, stronger economy, what I view will be like no inflation 12 months from now, a focus on AI. None of that is priced into Tesla at this point. Elon getting a comp package, new models coming out, again, aggressive expansion of the robotaxi network. None of this is priced into Tesla at this point. That's where the money is made. If it was all priced into Tesla, Tesla would be hundreds and hundreds of dollars higher than where it is today. So I think over the next year, we could see a lot of appreciation in a stock like Tesla. Now, I think other stocks could also do very well. It's not going to be just a Tesla market, right? There's going to be other winners. But I think a broadening out of the winners is likely going to happen. Instead of it just being the Mag 7, you're going to see small cap AI stocks. You're going to see, mid cap AI stocks, edge AI stocks like Tesla that are doing specific things like robotaxi and humanoids, right? You're going to see a lot more opportunities in this market. And a big force that the markets have been fighting up until today is the Fed. And the Fed being this kind of, wind coming at you and you're fighting uphill with freaking, cinder blocks you're dragging behind you. Now that wind just cooled down a lot. Okay. And I do think from mid-October through the end of this year, you're going to see a very aggressive rally in markets. And I think that's just the start. I think as these things start to become more obvious, we're not going to have an inflation problem. Growth's going to be great, right? Good to great. Bunch of rate cuts. AI adoption continues. AI investment accelerates, right? As Wall Street realizes these things are happening, they're going to start to chase. I think we could have in 2026 a market that is euphoric, not bubbly, but euphoric, okay? Where you have stocks that are going up, great companies that are being appreciated. One thing that also happens when rates come down a lot that we witnessed in 2021 was time horizons get extended, okay? Like Tesla was a $400 some stock. Tesla is higher in 2021 than where it is today, which is crazy to even think about with how much progress we've got with Tesla after almost 5 years. Okay. Most of that was due to interest rates being at nothing. So think about it like this. If you were retired and you had, or close to retiring, and you had $2 million to live off of, if you can get 4.5% from a 10-year treasury, you're going to get $90,000 per year that you can spend and never lose your $2 million. Okay? That's crazy. If rates are half of that, now you only have $45,000. Maybe you could get by with that. Okay? But what if rates are even lower than that? You almost have no other choice but to go out and take more risk. Okay? So rate cuts, that's partially why they help risk assets so much. And I think Tesla is one of the clearest opportunities in the risk market. Why? Because I view personally, one reason why I love Tesla so much, I view the odds of failure long-term very low. And I deem the odds of success very high. And that success could be 10, 20, 30x from here. Life-changing amounts of money for most people. Whereas, with some other stocks, okay, the odds of failure could be a lot higher. Okay. The opportunity could be high as well in those other names, but the odds of failure are higher than most stocks compared to Tesla that have a 10, 20, 30x opportunity. Like, I can't think of another stock like Tesla that has the kind of risk profile, right? I can't think of another stock that has a 10, 20, 30x opportunity ahead of it with a success probability like Tesla. Even the stock I have 100 grand in the trading community, like, I think that company has a very high probability of success. But if I were to get the call that I have, only a certain amount of time left on this planet, what company am I going to put my money in to leave for my kids? Okay, it's Tesla, hands down, because I think the odds of failure there are very low. So I think that's what could start to appeal to a lot of people as well, even of older age, where maybe you have to start taking on a little bit more risk to fund your lifestyle, perhaps. It's the overwhelming odds of massive success in Tesla. Wall Street is not picking up on these things yet. Oh, but they will. So, yeah, I'm excited. I don't really want to throw out price targets here, but I wouldn't be shocked if Tesla's a $400 or $500 stock by the end of this year. I wouldn't be shocked if next year Tesla's $700, $800, $900. Like, I wouldn't be shocked by that. Is that my firm target? Not necessarily, but those are the kind of, gains that we could be looking at here in the next 12 months. Let me know your thoughts on this information down below in the comment section. Hit that like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.